Hi there. So we're getting excited about this webinar. We had a little bit of technical issues, but we are here and we're ready to dive in. Now, I have one of our fabulous finance officers here with us today. So I'm going to also add him here. All right, Craig, are you here with us today?
Yes, yes, I am. Can everybody hear me?
Fabulous.
You hear me, Megan?
I can hear you very well, yes. All right, I'm going to show my screen and we're going to dive right in. Here we go. All right, I'm excited about today's topic. And you can tell, first and foremost, I am not Ty Crandall. I'm filling in for him today. He is at an event speaking, and so I'm really excited that I have this opportunity to be with you all here today and host today's webinar. So I'm going to get this webinar started. And Craig, I'm going to rely on you to tell me if you can still see my screen okay. Did that expand to full screen? Sometimes it doesn't like that in
Uh,
GoToWebinar.
yeah, it turned I had the first slide up. When you went to full screen, it widened out.
It went all funky. I'm telling you, it just doesn't like uh, PowerPoints in GoToWebinar. Well, we can work through it this way. I'm just excited to be here with everybody today. I'm going to try one more thing. And see if it goes for the whole thing. Here we go. How about that, Craig? Did that work?
That's working.
Perfect. We got this today. Technology issues and people on airplanes, but we make it work around here at Credit Suite. So anyway, I'm filling in for Ty Crandall today, and today we wanted to share a topic that we've had a lot of discussion about here at Credit Suite. We've been running our metrics and numbers, and we've been talking a lot about our direct funding program, and we've noticed a lot of our partners have a lot of great questions about our direct funding program. And so we thought this would be a fabulous opportunity to really talk about the direct funding program right here with partners and give you an opportunity to also ask a lot of questions. Now, Craig, he is our finance officer extraordinaire, our finance expert, and he's joining us today to really answer your questions. Now, I didn't get a picture of him here on this slide. They just put my picture on there, but just imagine Craig right there. He's
Oh,
fabulous to work with. Yes. And it's really been such a great opportunity working with you over these years. And I'm excited to get into this content. If it would let me switch the slide. It just really likes me.
Hey, Megan, I have a quick question for you.
Yes.
I like to see who I'm talking to if I at least see a list of the people. I'm looking for a little panel here that shows me who's actually in the meeting with us.
Yes. Yep. So we have about 16 attendees right now, and I'll get you set up as a presenter so that you can see that full list. And they can also post their questions, which is a lot of fun. The other great thing about this webinar is that it is recorded and we put it on our YouTube page. So if a partner misses this webinar, or if it's something we want to share with additional partners in the future, or if it's something that somebody here attending had a question on something, they know that webinar is out there and they can go back to this webinar and get more detail. So while I'm getting this started, I'm going to make you a presenter, but instead of pausing the webinar, I'm going to ask a couple questions. We'll dive in. I'll let you do the talking while I get that all set up for you, Craig. So direct funding is different than the business credit builder. And I think this is a question that comes up quite a bit with our partners. Our direct funding program, the focus of this program is to bring financing directly to the business owner. Now, everybody knows here at Credit Suite that we help business owners establish their business credit reports. We have our business credit builder and we have our advising team, and they're amazing. It's a team of experts that help business owners really focus on establishing their business credit reports and creating that strong business foundation that lenders like to see in order to get financing. But along with that, while our customers are going through the business credit builder, they often have immediate financing needs. Or there may be a business owner that you as a partner that you're working with that isn't ready for the business credit builder, but they just want to work on getting matched up with the financing that's the best fit for their business. And that's the focus of our direct funding product. And we have these two products to really service both types of customers. So I'm going to reiterate that we have our business credit builder, and that helps business owners first build a strong foundation that lenders like to see. That's getting all their corporate records in order, creating that credibility, and then also looking at business credit reports for the business and building those further. The direct funding program allows us to help customers with their immediate financing needs, and then also plan for future financing needs. They may not qualify right away, but they can have that consultation with a finance officer like Craig that's here with us today to help them get that immediate financing or plan for financing. Anything you want to add to that, Craig?
Yes, if I can, Megan, thanks. Yeah, and that's a great point. We are one big happy team here at Credit Suite, but there are two separate sections, and we work together very, very well. For our direct funding clients that we get, I'm sure you as a partner, I'm talking to future business and our current business owners. Most of the time, people want money now. But we also have to be able to talk about business credit, how to make them more credible and more fundable, more attractive to lenders. And then on the funding side, obviously, we have to deal with their true business conditions as they stand at that point. And we also come across as consultative, meaning, if you happen to be in bucket C, we want you to get up to bucket B and to bucket A. We always want all of our clients to eventually, if they aren't currently, but to be in a tier 1 status so we can get the cheapest paper for them as they're moving forward and growing their company. Every company is at a different stage when we're talking to them. Some have bigger growth spurts than others. Some are meant to be. Some companies are meant to stay small and medium because they want to keep it a family-sized company, and some have aspirations to grow even bigger. And we have facilities and programs to help both such scenarios. We're always talking about business credit and how it affects the overall funding process, but that's what our finance officers and our processors do. We take, like I said before, a consultative approach to where the client is, the business owners we're talking to, because we think it's fair for them to understand exactly what they look like to people who lend money. And that's from banks all the way to private money, and what they look at. So we focus on that and try to educate the best we can on that, on the funding side as well.
I like that, Craig. That really helps to clarify it. I think one of the common misconceptions that we run into is many partners may think that if a customer is in the business credit builder, they also can't go for that immediate financing, that direct funding, or that they have to establish their business credit reports first in order to do that. How do you usually coach a partner through that discussion?
Well, when you're talking with a client, obviously you want to see where they're at, and we love our UBF program, and that's our unsecured business financing program, and that's one of our favorite programs for startups. As we've found throughout the years, many and as you, our partners, know, being entrepreneurs yourself, when you first have an idea, hey, I want to be a business owner, and you come up with a business plan, it costs money. 99% of all business owners, when they first start off a business, they rely heavily on what we call family funds and personal credit cards to launch their business. You know, everybody's got a GoDaddy account and buying computers and getting into marketing and all those types of things. And what we've seen is a trend where, you know, a business has been up for 3 or 4 months. They come to us, they've already maxed out their personal credit and everything. So their 700 FICO scores and up are now down into the lower 600s because of utilization. And then they come to us with no revenue yet and marginal credit. And then we have to show them how to climb out of that hole. One of the best programs to prevent that is our UBF program, you know, which can protect and put a shield around your personal credit. And we divorce you financially from your business right away by leveraging a good qualified personal credit to establish business credit right away. And that's one of our favorite programs to do so. It really helps. It really helps a business owner separate the two, because you're always going to want to protect your personal credit. There's a bunch of things, you know, between, you know, weddings and moving and buying cars and everything else you need your personal credit for. The liability of your business does not have to be one of them if you talk to us in time. And then as you move forward, and then we start getting revenues built into the business, then there's other products that open up. But as far as building that business credit from right off the ground, from right away, obviously it helps if that particular entrepreneur has good credit in the beginning. If not, we also have a credit partner program that I could talk forever on that. But that you can also use as well. So if there's a will, there's a way. But more importantly, we like to get into the education mode of it and let them know where they're at. You know, because not everybody has $100,000 or $50,000 laying around going, hey, now I want to start a business. You know, normally it's the idea comes first and then the expenses come later. So, and we have programs to fit both.
Yes, and I loved what you shared about the UBF, because there are times where I'm speaking, you know, I'm out at events and I'm speaking, and inevitably I come across customers, and that's so much fun because I get to hear about how they love the advisor team and they love the finance officers. But a more common question I get is, hey, can I go get financing now? Or do I have to establish my business credit reports first? Or hey, I went and maxed out my personal credit cards so that I can establish my business credit reports before I go apply for financing. And of course, my heart drops when I hear that latter scenario, right? It's definitely a misconception that can be out here. And I think that's why I wanted to make sure we talked about this here on our webinar today, that you can go for this direct funding as you're in the business credit builder. So that means as partners, you guys have the option to put a customer in the business credit builder and opt them into the direct funding as you enter them. Now, if it's a customer that you are working on their financing or there's some other reason, then you can unmark that box and we won't talk to them about financing. But you do have the option to mark that box if they're in the business credit builder, and they can go for financing right away while they're working on establishing that business credit. And like Craig said, one of the big things that we're trying to educate business owners on is separating the personal and the business, meaning not putting all their business expenses on their personal credit cards, their personal credit report, so that looks like your debt to income ratios are through the roof, and those business lenders are then more timid in lending to the business. Now, that doesn't mean a personal guarantee won't be required, but it's being mindful of how much debt you personally are carrying for the business. So thank you, Craig. You're the expert. I'm just restating what you said. And basically, we do also have the direct funding, and I wanted to make sure those two are very clear. So if any partners here have any questions about it, the difference between the business credit builder and the direct funding, post them, because I'm sure other people have those same questions. Don't be shy. We're here to answer those questions and make sure it's crystal clear so that you're as successful as possible. All right. So a little bit, and Craig, I'm going to let you talk more about this. I tried to put together exactly what's included in direct funding, but in all reality, there's so much more to what you all do there for our business owners. So you're the finance expert in this within Credit Suite, and you work with many different lenders, and that puts you in a really different situation than bankers find themselves in. Because if you think about it, a banker just works at their bank, that business lender, and they only know their products, and they're not looking at what other banks and what other products are out there. And then, and even a step further, is what product is best for that business owner. And so you're in an amazing situation where you have this ability to look at the whole market, look at the business owner, and match them with what is best for them. And so that's why I call you a finance expert. So direct funding includes access to a finance expert. You get that financing consultation. You know, Craig, I hear you on the phone with these customers, and you're getting to know them, and you know them and their business, and you're consulting them on what they can do. You're also, with our direct funding program, you're matched with the business's best lenders. We have white label servicing too, where we can maintain that white label through the finance process with our finance officers. And then we also have a lot of marketing and resources if a partner really wants to talk about financing and market those services to bring in more prospects. I'm going to let you expand more on that, Craig. Any
All
thoughts
right.
you want to share?
Yeah, sure. Yeah,
Okay.
the finance expert. Thank you. I don't know if I'm not an expert at any one thing, but I'm really good at a lot of stuff.
I
So
will call you an expert, but I appreciate the humility. So,
well, because we have to wear a lot of hats. Like Megan was explaining, the growth of this company has brought us in contact with just about every industry you can imagine across the country. And for that reason, we have to wear a bunch of different hats, and we have to tailor every conversation and every funding program towards that not only the business owner, but the industry, time and business. As you guys are starting to fill out FBQs and starting to send us clients, you'll start to see repetitiveness over the same types of questions. Those questions are very, very important. And I don't want you to confuse our FBQ, which is our finance blueprint qualifier. It's a qualifier. It's not an application. It does not require a signature. It's a information gathering tool that helps us as a team, no matter where the file goes, to understand where that client may or may not fall on the financial tree. And time and business, industry, monthly and annual gross, number of owners, actually where you're at located in the country may make a difference. All those different types of things that we know that underwriters look at depending on the different types of programs. Like I was said in the beginning, we always take a consultative approach to clients to let them know what they're eligible for now. And if they're not in a tier 1 status, we're always constantly telling them what they can do and to get into that position to where they're getting the best loans that are out there. We have an advantage. We have, every funding source you can imagine we have access to. We do everything from purchase order, accounts receivables to, $500 million commercial buildings, all the way down to a $5,000 revenue loan. So we wear many different hats in the finance office, but we have a fully staffed team that's motivated to help your clients and yourselves out, and we're dedicated to them. I would have to say about 70% of our phone calls are just answering questions and educating. The financing takes care of itself because your clients will learn to trust us and understand we always have their best interest at heart. And that covers the match for business best lenders. White label, you have that ability when you're inputting a client. There's a synopsis section in there that the finance officers would love for you guys to utilize to kind of give us a little bit of the background or what you think is important about your client that doesn't fit in the normal questions. And we also, there's like Megan referred to, there is a little icon you can click on if you want us to contact you first before the client, or if you're just want us, if you already prepped your client for our phone call, then we can just call them directly and then update you on our notes. We always want to email and CC you on any communications between your client and our finance team. We also updates our notes where you can keep up with that file, because we are pretty busy. So we try to limit phone calls if we can, because we want to dedicate a lot of that time for your clients. So we have automated systems that are designed to catch you up, but we're also there to answer any questions that you guys have, because you are our partners. That's why we call you our partners. So we can maintain white label through there if need be. I address myself as working with you when I'm calling that client, if you click the right button, or we have that conversation prior to. Marketing and sales resources, that's something that that you'll have access to help you with our marketing. To get the background 101, I'll probably save that little speech for the end of this class here, and answer some questions. But I've got some ideas on what I would do. That's one of the questions that I get asked all the time. I'm a brand new partner. I'm new to this. What would you suggest I start, and how would I start? So I get a lot of those questions as well. But there's a lot of services that are there for direct funding. Like I said, we're always there for you to answer any questions via email, text, or voice. So.
Yes, I appreciate that, Craig. And you talk about so many great things. We could probably do 10 webinars, right? We should do a whole series on this, because I listen to you interact with partners, and I love you share so much great knowledge with them. But at times, right, don't you wish we could just bottle it up and make it just a bite-sized portion? And
oh yeah, it does seem daunting sometimes, because there is so much out there. There's a lot of different products and a lot of knowledge, and we don't expect you guys to become experts. We're there to do that for you while you guys are out generating business, and free you up to do that. That's where our successful partners really thrive at that. They get into a position, they get to know how we do, how we work, how our CRM works, and then boom, just go out and find people every day, all day long, and then we'll just keep turning them for you.
Yeah, you really touched on an important principle there, and I think that's probably in your top 5 things that successful direct funding partners do. But you're right, Craig. I mean, you've been doing this for years, and I think it would be shortchanging you as an expert, and really all of us in this space if we could really make everyone an expert within an hour or a minute. And I think that's the power of Credit Suite, and that's the power of being a partner, and that's the power of the direct funding program, where partners don't have to be the expert. That's what the finance expert does. And our goal is to get this information to help as many business owners as possible. So the partner's role is to go out into their communities and find those business owners that need Credit Suite, which I would say is all of them, but I'm biased, and bring them to Credit Suite so that we can help them, and to help them not make those really common mistakes that a lot of business owners make. We want to prevent those. Let's really buoy up our communities and improve their ability to get access to capital. I think that's one of the most frustrating things, is I'm interacting with businesses within my own community and all over the US as I travel, it's really, there's this feeling and perception that it's really hard to get financing, and they need these finance experts. They need you, Craig, as their advocate. So what I wanted to dive in next is why a finance expert, and we just talked about that a little bit, but what type of financing is best for the business now? Which lender is the best fit? There's so many concepts. Planning for financing in the future, someone that speaks to the lender's language. Lenders have their own language and their own personality. I was one, and I understand that. And I think there's something so powerful about having a finance expert that has this relationship with the lenders. I'm going to let you expand on this, Craig. What are your thoughts on this concept?
Well, in this role, we're acting as a fiduciary. I mean, our best interest is the client's, not ours. So we're always looking for what's best for the client based on the bucket that we know that they're in. Now, not every client's going to like what bucket they're in. You know, some of them don't know they're in that bucket, and then we have to educate them. So sometimes, reality is not always as easy. But, finding the proper lender and along with the proper program to understand what the goal is of the client. There's always a use of funds. We always find that out. That's very, very important. What's the purpose of them? What's gonna make them feel better and feel like they're accomplishing something and ultimately making more revenue? We talk about meeting margins all the time. What's the plan? We don't want to suffocate a business with a loan that they can't afford. But sometimes there's loans out there there's certain loans that's the only ones they would qualify for. And then sometimes the decision would be, do I close my doors or do I take this loan? Or what else can I do to keep it afloat? So that's where, once again, coming from a consultative, but establishing the relationships that we have with our lenders are paramount to us. We know what they do and what they can't do, and we protect them from fraud, just like we protect you, our partners, from fraud. Not every client we have is going to be a family member, so and certain people, don't always. Tell us the truth. So we do our due diligence and confirming and validating all documents, but that's a two-way street as well. But in that focus, we're the advocate for the client. Okay, we don't just grab something and turn it into an underwriter, especially if we have a feeling that it may not improve the odds of getting an approval, if you know what I'm saying. So we're always in the best interest of working with the client and where they're trying to get to, and then more importantly, educating them on the why, so they fully understand, their fully informed decision on if they're going to move forward with a particular product or not.
Yeah, I really like that. It was interesting. I was in California meeting with one of our lenders and just how are they doing? Wanted to check in. And, one of the reasons they love working with Credit Suite and the business owners were able to send their way is because we also look at the customer as they are now, and we don't let them, and I don't have a better way to say this, and I should think of a better way, but we don't let them shoot themselves in the foot. Do you know what I'm saying? So, like, for instance, and I'll give you some examples of what they brought up. If a business owner has their Secretary of State information, that's basically their birth certificate for the business, right? That's what incorporates their business. Let's say the address doesn't match what shows on their application and doesn't match what is on their business license, and all these things are completely off, and we're sending them to a lender that we know cares and cares a lot and is probably going to ask for tax returns if those things aren't aligned. We're not going to do that to the business owner. We're going to tell them, hey, get your records in order for this lender, right? And I love those scenarios where we're able to just add a lot of value. There's a huge list of stories. I'm sure you have a lot of great stories on how we're really able to help these customers. And it's hard as a business owner. We've all been there where when we needed financing, and you're so busy running your business, just amazingly busy. And we all love that. We're entrepreneurs, but you're so busy that the second that thought crosses your head and you're thinking, I need financing and I need it now. And then you realize, holy moly, what bank do I go to? Who do I talk to? And it's usually somebody that you start with, but there's not a way to really know and be an expert in that way. And you really need an expert that's by your side to get the best financing for the business. So I like that. Any other thoughts, Craig, on why a finance expert?
No, not on that slide. No.
Okay, perfect. Well, let's keep going. The power that financing gives a business, and Craig, you probably have stories, right, from customers that we've been able to help. I know they're near and dear to us all because, that's our why. That's our goal. here at Credit Suite is to help these business owners succeed. And the power that financing can give a business is huge. I know of a lot of great stories that have come. We've helped karate studios get financing. We've helped a widow finance more dump trucks after her husband passed away so she could get more. I mean, we have so many more. Craig, any thoughts on this concept that you want to expand on?
Well, it's hard to keep it short like you did. My problem
Well,
is
I
I
wanted to
talk
give
too
you
long.
more time. So,
I got you. Well, there's a lot of good stories out there, but I think the bottom line is there, by explaining to clients what we can do and what we can't do, and working on their behalves, we're in the 70 percentile of return clients when funding, meaning that if we funded you once, then there's a 7 out of 10 chance you're coming back to us and funding again real soon. That's I can't tell you how impressive that number is in our business. Most people leave, with either a little, they don't like it, but they took it because they had to, but they didn't because they didn't fully understand. We take pride in what we do, moving people from, a bucket C to bucket A. There was an e-commerce company that he was cash rich and credit poor. I always used to make fun of him because, he's making $400,000 a month in gross revenue, but yet he had a 550 credit score. And I told him how ironic, that just doesn't make any sense. That how could you make that much money and have personal credit that bad? So he finally listened to me, and we were working on his business credit, and I had to, because of his credit score and the way he was doing his finances, we could only get him into a revenue loan that was, it was a short-term loan in the 30 percentile range, 35%. 35%. But in order to keep his inventory up, to keep his revenues coming in, that was basically just digging into his profit, but he still was making a profit. But that was the only place he could get the cash. So he finally listened to me. And now it was I think it was just this past summer in June or July, we finally got him an SBA product loan. Very, very large loan, plus 500,000 on a 20-year note. And he wasn't anywhere close to that before. So now he has a large line of credit and a very nice loan with a very low payment, very low interest rate, something that he can manage. And it's just, he doubled his income by going that route and listening to us, because he had made 2 or 3 rounds in the revenue range where, it was just the interest rate alone was just burying him and eating up into all of his profits. So we got him out of that rut, and now he's on his way to, doubling his income with a lot lower interest rate loans because he listened to us. We have those types of stories that happen all the time. Not all stories end out great. Everybody's not the same. There's different industries and different things that happen. And there's different owners. When there's multiple owners in a company, sometimes it's a little more difficult. But there's plenty of stories out there with us, especially with in the last 7 years, Megan. We've financed quite a bit of companies in that time frame, and I keep in contact with some of them, just to see how they're doing. So. But yeah, we love it. We love our customers. We love to see success stories like that, and we love to see when clients actually listen to our advice.
Definitely, yes. It's as you were talking, my mind just started thinking about our why. What we do, and I started thinking about the impact that every business owner has on their family, on themselves, on their community. And that's why we do what we do. And it sounds sappy, but if you think about all the people he employs and their families and what it means for them too, these are real people and these are real scenarios. And you were able to,
well,
yes.
Exactly. Well, if you think about that scenario, mathematically, financial, if I told that to an economics 101 professor, they would probably tell you not to do it. But who would take a 35% loan to pay off a 20% credit card or a 19% credit card? It doesn't make sense, right? They're both depreciating. You're using a higher interest to pay off a lower interest, which doesn't make any sense. But it was the only thing that could fit him in the short term, because it was the only cash he could get to do what he needed to do. And because the one thing that was stopping him, we identified it, we found a way to fix it, the way to fix it. So 90 days he had to batten down the hatches for about 90 days to come out on the other side 10 times better than he was. So
Yeah.
it was a good story.
It's a good one. And I know we have lots of them. And it's, I love those stories. I love it when we get to go to an event and our customers come up and just say thank you, and I almost feel like just telling them thank you, because that's why we do what we do. And it's a joy. Okay, now this is something you get to coach quite a bit. And so I thought, let's do a webinar on it. How to enter a direct funding customer. And I know we're all super busy, and so sometimes this can feel daunting, but it's literally 3 steps. And so the first thing you do, and this is a little bit small, but everybody can go to their suitelogin.com. And the first thing we do is we log in, of course. Go to suitelogin.com and log in. And then you click on the Add Client button there on the left-hand side. And that's very intuitive. So you hit that Add Client button. And let's say I want to add somebody to direct funding only. It's somebody that I think will buy the Business Credit Builder once they get financing. So I'll click on that Add Direct Funding customer tab, and then I complete the FBQ. And you mentioned this FBQ, and it sounds really cool because it's an acronym, but it's the Finance Blueprint Qualifier, and it's really not that complex. Craig, what information are we asking for on that first FBQ?
Well, these questions allow us to quickly go through and figure out what programs are available, so we can make sure that we touch those programs when we're talking with the client. So those questions are designed to give us that information. So the important information, time and business, obviously address, monthly annual gross revenues, in qualification questions, do you have any, do you own any commercial property? Do you have a 401k even? We throw that in there because that's an option. Obviously, most of the time our 401ks would fall underneath one of our startup programs, because it's a good product for our clients that are retiring from whatever job that they've had for 25, 30 years, and instead of going fishing every day, they want to become business owners, so they can reinvest their retirement into an ongoing business. So we even ask questions like that. But those questions on there will guide us in the right way to make sure that based on the information we're given, we want to touch those programs and discuss those with the client when we make contact. So they're very, very important. One of the myths though on there, and you'll see, is we don't have to have a credit monitoring service with username and password. If it's available, we prefer to have it, because it empowers us even more as a fiduciary, like I was saying, because we don't pull credit. We leave that to the end. So we generally go off people's, what they say they have. So that's generally what we're looking at when we're looking at those questions. So as we go through it, those are the questions that will provide us what we need to move forward. Basically what I'm saying. I saw the screen flutter. Megan, you still there?
Yeah, I'm still here. Oh,
Okay.
and I was talking to a muted mic because that's really productive. So that makes sense. I think and what you guys are looking at, and you're right, it's not an application for credit. When we are gathering information so we can start that conversation with the customer. And I think oftentimes the partner's already having a bit of that conversation, and nobody likes to repeat themselves. So I think as the partner gets that information, putting it into the FBQ, at least giving us the customer's name, their business name, their phone number, generally what assets they have, and a general idea of where their credit scores are, we can at least start the discussion from there with the first FBQ.
Now, even though nobody typed in a question, I can feel the question out there.
Perfect. I like it.
I can feel somebody wants to know the answer to this, so I'm gonna let you know. The reason why, guys, we don't have one app that fits all is because we cover so many different types of clients, industries, and programs. And if the world was a better place, there would be a universal application that would warrant any type of funding program, but that's just not the case. So the reason why we do the FBQ is not only to give us a guidance on what to talk about, and to see where we can get the client what he or she is looking for their business, but it also lets us know what program to go to, and then based on that program, that will dictate the application. If needed, it'll be that application for that particular product. So, I understand that you guys are talking to business owners that are sometimes extremely busy. They feel like they're filling out multiple applications and it's a waste of their time. So that's why on the FBQ, you have the option to give it to them to fill out, or you guys can fill it out. In a perfect world, I would want you as a partner to go over that with the client and ask those questions. I don't know if it's over the phone or if it happens to be in your office. That way they don't have the feeling like they're filling out an application. The application, depending on what they qualify for, would be the application that they have. Some clients we have may have 3 or 4 different applications. If I'm doing a UBF program, an equipment lease, and we're starting up the SBA, that would be 3 different applications right there. And we do a lot of those. We do multiple fundings at once with clients, so that may come up as well. But I could feel that question out there, so I just wanted to answer it before somebody typed in.
You must answer that question from time to time.
Quite a bit.
And that's why you're here, is just to add that insight. And I just feel like I want to show the screen on the FBQ process. I think that would be really great to go over. So I'm pulling that up right now, and then I will show screen again. But I really like that. So the FBQ, Craig, is just a way for us to generally understand the client and get that information. Then once we find that there is a certain type of financing that's a really good fit for that customer, it's at that point we ask for an application, correct? Typically.
That's correct. Yep. Because what we don't want to do is to have them fill out applications for stuff that they're not qualified for, because that's when they will get a little disgruntled.
Yeah.
We want to have them fill out an application, then come back with a simple disqualifier that we've known before the application. That would constitute wasting an applicant's time, and we try to avoid that at all costs.
Right. And that's what a bank would do, right? They'd give you an application and say, fill out all this stuff so that I can decline you.
Right.
That's
exactly.
a little pessimistic.
Right.
But we don't want to do that. This is not a throw a million balls in the air to see if we can get one through the hoop. We want to better understand the business so we can match them with the lenders that are a good fit for them, which I really appreciate. So I'm on this Add Client tab, and I'm clicking on this Finance Blueprint, the Add Client for direct funding. So here I'm just going to put the customer's name, the business name, the phone number, their email, and then who should be the initial contact. Is it the client or is it me as the partner? And once they fill out that information, then you get that information, Craig, and you're able to reach out to the client. But it also, once I hit submit on this, and I'm going to do that testing so that my team doesn't call me and say, who is this person? And it won't let me enter the same phone number twice. And the important thing right here is to always put the client's email and the client's phone number, right, Craig?
Yes, please. Preferably the best contact number. Yes.
Yes, don't give us the 800 number that they never answer, because then that makes it a little hard to get a hold of them. But if this is the customer's actual phone number and the customer's actual email, then it makes it a lot simpler for us to get in touch with them. Now, if I mark myself as the partner, are you going to call the customer before you talk to me, the partner?
I call whoever the partner wants me to call first.
Perfect. So if I mark this as a partner, you're going to call me the partner first.
Right.
If I
Yep.
mark the client, then you're going to call the client first.
That's correct. So if I call the client as an example, like now I would call the client and say, hey, my name is Craig Gibbons. I'm a senior finance officer. I just got done talking with Megan. Did she let you know that I'd be calling? And then that's how the conversation would go. If I just called you, then obviously I would call you and go, hey, I see you just put in Mr. Testing Ball. So let's find out what's the deal with him. Help me out here. What can we do? What's
Okay.
he or she looking for? And then blah, blah, blah. And with just, the more information you know, the better the phone call will go, the quicker the rapport established, the quicker we can get them in a program and start talking about the nuts and bolts of why we're calling.
Okay, very good. Well, and you can see really, let's see, let's actually share the full screen here. You can really see that that first FAQ is quite simple. The next one gives us a little more detail, which is really helpful as you're talking to the customer. But it's nothing I feel that a partner should be really afraid of. And I know there are times where a partner feels a bit overwhelmed by that process. So I wanted to make sure we didn't demystify it at this time. All right, let's see here. Any other thoughts to add on how to add a client?
No, that's
Right.
pretty
I want to make sure
self-explanatory.
I involve you because you're the expert here. So
We just so the clients know, or excuse me, just so the partners know, our intent is to contact that person the same day. If it comes in after a certain time in the afternoon, depending on what time zones, because we have affiliates in every time zone, that time will be applicable to that time zone, and it'll just be moved to the next day. But all leads will be contacted within 24 hours.
that's pretty amazing if you think about it. The finance team is just fantastic at getting back to those. So thank you for that clarity. That's a really important point. Now, briefly, because we're somewhat running out of time and I want to get to the FAQ, we've got some good questions. For partner resources, you can click on partner resources, go to the resource library, and then you mark this finance resources here. This is a lot of good information. These are resources you can use to market, to help attract business owners so you can start consulting with them and enter them in the system. We've also got details in there on, how to enter a client and general information about what all our finance products are. Any additional thoughts you want to add on that page, Craig?
No, that's pretty self-explanatory.
Okay. So I do have some questions that are coming in, and it may answer some of these slides. So I'm going to set it here, and if you're good, good with this, I thought we could answer some of these questions, and then you could wrap us up by sharing kind of the top 5 questions that successful partners ask. So, Craig, here's a question for Erica Brown. Thank you so much for joining us, Erica. Why is it hard to get funding for a credit repair business?
That is a good question. Because you're one of us. For some reason, you're considered and you're lumped into financial services, credit repair, any kind of financial services which credit repair is lumped into. For some reason, we just don't like to lend to ourselves. It's a higher at risk company. Generally, the industry has up and down cash flows. But there are some lenders that will entertain that. I've even gotten a revenue loan done before. SBAs, most likely not. Most of our term loans, non-SBA slash term loans, which are basically the same thing except they're reduced down to 5 to 6 year terms. They generally run the same qualifications, and they're industry specific. So I wish I had an answer to that because but it is. I always laugh when I tell people that because we don't like to lend ourselves, money for some reason.
Yes.
I don't get it.
Yeah, it's really funny. I love the restricted industry list or the high risk industry list because it's funny. Banks don't like to lend to their own industry because it's high risk. And that list, I was a banker, so I'll kind of put on that banker hat and say banks typically are afraid of industries that have kicked them in the shins a couple times. And so that's why, they've been kicked in the shins too many times. They've got too many bruises from that industry. So they just generally lump the whole group together and says, you're high risk. And therefore, to lend to you, we want more stuff. We want to feel more comfortable because we've been kicked in the shins too many times. So let's see. Erica had another question, and these are all over the board, but I know you can handle them, Craig. It says, is a startup able to receive funding for equipment if the company is a trucking company?
Good question.
Yes.
Startup companies, when it comes to equipment, we have an app-only startup upwards of 50,000 that we can access, but it requires a paper. And a paper for equipment financing or leasing products is a 685 FICO of the owner, and they really would like to see comparable credit on their personal. So I'll give you an example. If somebody had bought, a $45,000 automobile somewhere in their history, and they're looking for a $35,000 delivery truck for their new company that they just started, and they're a 685 or higher, then yes. But since you brought up the word trucking, I wanted to be clear. Trucking is very, very difficult for us to get done. The industry across the board, across the country, there's few and fewer lenders that are actually financing over-the-road trucking. So any trucks that require a sleeper cab is a no-go with us. There are certain places where we can refer them out to where they could, depending on where they're at, because we're always wanting to help clients. But as far as what we do here at Credit Suite, that's one of that is our Achilles heel is over-the-road trucking. We can only do sleeper cabs if it's part of a fleet, and a fleet in our eyes is 5 trucks or more. So if they're in transportation and they're a broker and they're looking to finance their 6th, 7th, or 8th or more truck, and we can prove that they have 5 other trucks on the road operational, then that's well established, low risk, and we're willing to do that. But any other types of equipment financing and leasing is very difficult. One of the bigger questions is why is it more expensive to do it on the business side than it is on the personal side? Well, because it's going on the business's credit and not the personal credit. I'll give you an example. If you come to me and you have very good credit, great time in business, I can probably get you between 6.5% to 9.5% interest rate on let's say a local. I'll just use a box truck as an example, a $25,000 box truck. If that same person who had maybe a 720 went there and bought it as on their person, they might be able to save 1.5%. But now that trade line is going to report to their personal credit as a trade line instead of underneath their company. So you got to pay a little bit more sometimes on the business. Business credit is like a teenager. You got to co-sign for it a couple of times so it gets strong enough to be on its own.
Yes, so. I love it. And I appreciate that feedback. She also asked, well, what about just the trailer if they've already got the cab? And it's, again, and it's not just us that has that Achilles heel. There really are there's limited resources in this area of financing, but she did ask that question. What about trailers if you just have a cab?
Trailers are fine. Yep, we can do any kind of trailer. Car haulers, all the way to connexes to to freezers to you name it. We can do trailers.
Perfect. Thank you so much for your questions, Erica. Alan has a great question here, and this is what you do. You hear a lot of business scenarios every day. So he's got a scenario for you. We have a prospective client who has multiple income sources with over an 800 personal credit score, wanting to set up a consulting business in marketing after many years of success. What should be the best steps to set things up to qualify for business financing?
Okay, if I think I'm hearing it right, all I heard is 800 credit score, startup business. Right?
Yes.
Did I hear it? Okay. Everything else doesn't mean anything. You had me at 800 in startup. That's UBF all day long. unless they're looking for FF&E for a storefront or something unique like that. With somebody with that type of credit, we could probably get them upwards of 150,000 in EIN only business credit cards with a 0% interest rate for the first 18 to 24 months. That would give them a lot of working capital, divorce them immediately from the business. And I love it when people go, well, I need cash. Well, very few places anymore where we're going to need cash. All right, we're about 5 years away from not even seeing cash anymore. So credit cards are becoming more powerful every day. And if we needed to liquidate some for cash, we have the ability to do that as well. But for a startup, unless they're looking for larger numbers, like hey, I want to buy a building and I want to with that kind of score, then there is a startup SBA program 7A that we can entertain as well.
Yes, I think another thought that came to my mind is I read that he had prior businesses, but keep in mind lenders lend typically per business, right? So if we're doing a startup, that's one scenario. If we're funding these other businesses, that's another scenario.
That's correct. Yeah, but we fund EINs, not multiples. So if there's, and it all depends on how they're structured. Is there a holding company that owns other companies? Are they all individually owned and they file separate LLCs and 1120s? It all depends on how they file, what the SIC code is, and what they're looking for. But there's no problems at all leveraging one company to get money for another. We just have to be creative on the use of funds. But that's what the FPQ is for. Yeah.
And that's what you're for. They don't need to, Alan, in that scenario, you just need to know that Craig is here. You've got access to finance experts. You can give them the peace of mind. You have the resources to help that client. And I think there's so much to that, right? There's so many intricate parts. We may find additional ways that are great for that customer to get financing. And it's really getting that customer on the phone with Craig to talk through every single aspect.
Oh yeah, there's something we do that quite a bit where we'll need to leverage one company who's better financials to get the company B, C, or D back up to standard where the client wants it.
Yeah, definitely. Let's see. I'm going to see what other questions. Some we may not have time for. This is a good.
I apologize, Megan. I don't see the questions, so
no, you're good. I'm reading them to you. This is what I typically do for Ty anyway. So
gotcha.
Let's see. So this one, I'm reading it. It said for customers that bring a personal guarantor. The reason I picked this question is I think it comes up quite a bit. So I think it'll answer a lot of questions. For customers that bring personal guarantor to qualify with good credit, what is the average time frame for liability before it shifts back to the EIN? That is a hard question, and the answer is not necessarily what people want to hear, right? And so I picked one of the most awkward questions, Craig, just for you.
Well, but it's a good question, because if I was a credit partner, that's gonna be my first question. I'd be like, "Hey, buddy, when do I get off the hook here?"
Yeah.
So I can fully understand the question. I talk to a lot of would-be credit partners and answer that question right away. Well, and we've asked different things, and the reason why there's not one specific answer is because we're talking about 4 or 5 different trade lines from 2 different credit sources, or 4 or 5 different credit sources, which all have their own in-house policies. What Capital One may do for a removal of a personal guarantor might be different than Bank of America or American Express. But there's 2 scenarios. One, generally it's 18 to 24 months with no missed payments, and then you have to inquire about removing the personal guarantor. But at the same time, I would not bother doing that unless you at least had an 85 Paydex with over 10 trade lines reporting to that particular EIN's business. Meaning that it can't be a stagnant or an unwarranted or not unwarranted, an unmaintenanced business credit profile. And they'll feel a lot more comfortable with lifting that, especially with no missed payments. No missed payments is key. And then there's another scenario where you, as the owner of the business, hopefully in those 18 to 24 months, your credit score has become credit worthy, and you could go in and see if they would replace you with that personal guarantor. Either way, both of those are in the unknown precise answer on this date it will happen. But that's generally what happens. For, 'cause now
Yes,
that we've been doing this for, for well over 7 to 8 years, we've had people that have passed that threshold of 2 years and that have come back and told us that's how it worked.
yes.
So, but once again, though, that's not up to us. That's up to the individual bank that issued the line of credit. So,
Exactly. So we don't have control over that scenario. They may change their policies at any time. The guarantor needs to understand that. I'm all about transparency. I think correct expectations just make really happy people. And I picked the hardest one in the mix because I feel like it's so important. That's what you do, is provide transparency. So I like that. Let's see, it's about time to wrap up, which is unfortunate. The last question I wanted to go over is Alan asked, he said, great, when's a good time to reach out to you specifically, Craig? And the answer to that, we want to jump on the phone with every single partner and talk about every single scenario. But one of the things that makes that conversation so effective and efficient is putting them in the direct funding tab. Put them in, whether you're confident or not, they're ready for it or it's time, put them in, put their information in, mark on there to contact you, the partner, first. And then that way, Craig, when you get that information, you've got it all up in front of you, you've had a moment to review it, and then that conversation is just really effective and efficient. That, if I'm correct, that's typically how you want to have these conversations. I know you do talk directly with partners, though, from time to time. So go ahead and expand on that concept.
well, production is power. That's just the way I view it.
Mhm.
If you're giving me a lot of files and we're closing a lot of files, you're gonna get a lot more of my attention. I like to give everybody the same amount of attention, but let's just say, what, we're not a nonprofit, and we do have a job to do here. But at the same time, I don't want anybody out there flapping and have questions that aren't being answered. I have a calendar link that I can send out as well. You can also, how would they access that? Megan,
Yeah.
through the portal. There isn't it in the portal they can make an appointment. I think I
Mhm.
know I've had a Calendly forever, but I think all the FOs now have one where we can
Yes.
schedule an appointment. And as we're working other files, we'll be in constant contact. I talk to partners all day, every day, because of working
Yeah.
files. I'm
Yes.
either updating the partner or I'm saying, hey, Mike hasn't returned my call in 2 days. You want to follow up for me, find out what's going on. This is where we left off. And there may be multiple files that we're talking about together. But if there's
Mhm.
certain situations that you feel that you need to be empowered before walking into a situation, meaning that, hey, I'm getting ready to take a phone call on this person, or I'm getting ready to go meet this person, and I would feel a lot more comfortable if I talked to Craig prior to going in there. So I have a little bit more knowledge. Then please don't hesitate to call me. If I don't pick up right away, that just means I'm on the line with another client, and I will pick up the phone and try to call you right back. We do have text features now, so we're getting into texting. I'm not 100% yet. I'm sorry, Megan, to say I'm about 80% on that.
We'll
My
get you there, Craig.
I
That's what
know
we're here for.
I said I just learned how to do it on my smartphone. Now I got to do it on my laptop. But that's one thing that we want to make sure that we can answer any partner's questions. So,
Yes.
and all the FOs are pretty much available to you. But you just got to understand, where we are busy with clients. So, and obviously that's our priority. But we want to make sure that we answer all questions for our partners and make sure you're going to the right, you know,
Yes.
right direction.
And I think that fits within the top 5 things that successful partners do. Just understanding you don't necessarily need to know the solution as a partner. You don't need to know exactly what's going to be the best fit for the customer. It's getting them in, at least as a direct funding customer, so we can start that conversation. It is not an application. We're not pulling credit. It's not a commitment in any way, shape, or form. It's to start that discussion. And when that direct funding information is filled out, we know that the customer's committed to having that discussion, and that the partner has taken the time to gather that information. And that's what it's really about. And that way our FOs are really spending time on those that are committed to it, ready to have that talk and see what options are available to them right now and what they can do to qualify for more in the future. So
Well, I wanted to get my little spiel out real quick before the end.
it's
I know we
all
got to get
yours. The
wrapped up.
floor is yours. Yes.
All right. I do get a lot of questions, Craig. What's the best products that we have? Where would you recommend that I look? Or how do I do my lead gen? What do I go after? All those types of things. My advice to you, to our partners, obviously you're going to be an industry or selling, what you're familiar with or what you're already involved in. So if you're coming from a real estate background, obviously we know we're probably going to get a lot of real estate loans. If you come from a distribution, then we're going to get a lot from there. If you're part of a BNI group, then I know I'm going to get one lead out of at least 6 industries. No pun intended. That was a joke. But so we're going to get all different types of leads, right? And they're coming in. So I get, all the time, like, what's your main thing? What's going on? And this is what I tell partners. Our 3 main products, okay, is our UBF program, which is our unsecured business, which is our credit cards, business credit cards. Very, very, very popular program. Great for startups, great for businesses that don't have a lot of established business credit already. The second thing is equipment leasing and financing. Okay. The third is our merchant cash advance and revenue loans. Okay. We probably submit more term loans and SBA loans than we do revenue loans, but we close a lot higher percentage of our revenue loans because it's just easier to qualify for. Revenue loans, MCA loans, is basically your cash rich, credit poor. UBF is basically cash poor, credit rich, and our equipment is in between. All 3 of those products pay you, the partner, and commissions starting at 3 points. UBF starts at 2.5 points and up. The other 2 products start at 3% of the gross whatever's financed and up. We handle everything from the beginning to the end. At least we prefer to. We know we don't like certain scenarios where we can't get to the client because it will delay processing and the way we kind of work with clients. So at some point, obviously, we want to be a part of that. But when it comes to commissions and what's our main products, those are the ones that we do. When we're talking to a client, we're always, whether they're a direct funding client and have no clue what the Business Credit Builder program is, we're always, always, always talking business credit. So we will always, and it is always our intent, if they have not already purchased the Business Credit Builder program, we entice them to come back to you to do so. So we're always pushing that full circle back around. Whether they were provided funding or not, they will all be treated the same. They will get educated the same way on the why. So if they're not qualified, they will know directly the reasons why and how to overcome that. Sometimes it may take time. It just may take a couple a little tweet here and there. I'll give an example. I had a UBF that was approved on Monday for 80 to 90,000 in credit cards for business only. That just got declined because once it got to the credit department before final underwriting, before we sent the apps out, we found out that the business was formed in one state and they were located in another state and did not have a doing business as or fictitious filing in another state. So it halted the whole process. So the little things like that. Now, what's the fix all to that? Do you just say that's just a ridiculous reason to get declined and just move on and don't get it? Or do you, hey, why don't I form an LLC in the state I actually live in and work in? You know what I mean?
Yeah.
So that, but that's up to the business owner to make that decision. And now they have they have the information to make that something as small as that. It's simple as that. We get those all the time. But those are basically the questions I get. Hey, when do I get paid? How much do I get paid? We fund everybody that is fundable and wants to be funded. So whether they're a BCB client first and then come to us or vice versa, it doesn't matter. If they're in our wheelhouse, we're communicating with them. We're, like I said before in the beginning, we're from a consultative point of view. A lot of people enjoy how we talk to them. We do not push products down their throat. If they don't want it or they can't afford it, we don't push it or sell it. We let them know where they stand and if they can qualify, and that's it. we move forward.
I love it. Yes, and that's why I love what we do, right? We're really actually here to help. So I'm going to recap really quick, and then we'll get Craig back to what he does on a regular basis. We're just so grateful that you took the time to join us today, Craig. It's been so enlightening. I've learned a lot. I've remembered a lot as I talk with you, and you really are an expert in your area. I think you probably don't even realize this, but you've got lingo and terms and phrases, and you're definitely, this is what you do on a regular basis. And I know for some partners it may feel really overwhelming, but that's what you're here for. So let's see, as a recap, direct funding product, it can be utilized alone or with the business credit builder. And so if a customer needs to build their business credit reports, which all businesses do, business credit builder is a great fit. And let's do direct funding then too. We have a large finance team with finance experts. It's not just Craig, although he's amazing and he's been with us for a good number of years. We have processors, we have someone in charge of lender relations. You know, we have a large team, and that's what allows us to get back to our customers quickly. We have systems and processes, and we can handle the leads that come in. Funding a business fuels growth, like we talked about, in communities, and it's really one of the many freedoms that we enjoy here where we live in the United States. So in closing, I just wanted to reiterate, here at Credit Suite, our goal is to bring capital to business owners, to help them grow and to help them succeed. We've already brought over $62 million to our business owners, and we're looking forward to doubling that and tripling that. That's our goal and our mission. So Alan put in a comment, thank you both. Thank you so much, Craig, for joining us today. We will get out an email with a playback of this webinar, and then also a way, if you do decide to schedule an appointment with one of our finance officers, you'll have the opportunity to do that. But just remember, don't be afraid to also put them in as a direct funding client. So that's all I have. Craig, any last words from you?
No, I'm good. I wish everybody well. Thank you for having me. Hopefully I was speaking clearly and precise. And I'm always available, guys. If you need us, don't hesitate to call us, make an appointment with us, do whatever you need to do. Your success is our success.
Yes, you were very clear and very precise, and I know we all learned a lot. So thank you, Craig. Thank you, everyone, for joining us. Let's make it a great day. Take care, everyone.